While some individuals want to tell you that everything is a-okay in the economy, I'm here to tell you the truth. The first thing we need to look at is what's happening in China right now. I got some updates for you as it relates to Taiwan. The second thing is the inflation impact. What's happening in some places is not happening in others. And the third thing is the Fed fumbles, what they are doing and other central banks are doing right now. And could this be the pivotal moment? Oh, we'll see. TSMC, this is the company that's in Taiwan that manufactures all these chips that the whole world is so reliant on, suspends work for Chinese chip startup amid US curbs. Now, I had brought this up in the video before this one, talking about China, talking about Taiwan, and of course, the US being in between. Now, they are basically saying you've got to restrict your output to this place or that place because we don't want China to gain access to these technologies and we want to pressure them as much as possible. Well, of course, you've got TSMC that's in Taiwan that is doing such a fantastic job at building the world's semiconductors, and it's, in my opinion, unusual that you would want reliance on one particular country knowing that this is going to be an issue at some point in the future. But anyway, that's besides the point. This is just showing us where we are today and these escalations. Okay, we had the tariff war, we had the back and forth, there was all of this going on, and now we get to this next level. Byron Technology competes on graphics chips with NVIDIA and AMD. Taiwan's TSMC hasn't decided whether Byron meets US rules. Anytime you got this involved, you're gonna have politics and policies and waivers and sweetheart deals and all these kind of things. We don't know what's gonna happen, but it just highlighted, number one, because of what I covered in yesterday's video, but also at the same time because of the potential ramifications of all of this. Next, China's export growth slows as global demand weakens. China is the manufacturer of the world. We know this, whether we like it or not. They have the best logistics. They can get you what you need when you need it. However, when there's one side battling the other, and China is one of those countries, you have a problem. Now, other companies have said, okay, we're going to move our production a little bit here to India, and we're going to move some over here to Taiwan, but it is nothing compared to what's going on in China. Nothing. Now, we can hope that we would, of course, diversify that, but what we've seen right now hasn't been really much the case. So what we are looking at here with this global demand weakening, you can look at China and their manufacturing as kind of just a way in to look at it, okay? Because that's going to tell us what's happening globally, because they manufacture everything, it seems. So that's one example. Okay, then we have the fact that their economy apparently grew more than what was expected. I think it was in the 3% range for their GDP. Now, this is, of course, a number that we don't know how accurate it is. But anyway, going based on their numbers that they provide, it just shows you that they were able to grow somewhat through the period. They had the lockdowns, they had all these problems throughout, but still able to have some level of growth. Then we have this. Uneven inflation spike redraws Eurozone's East and West divide. 25% spike has propelled Estonia's price level beyond Spain. Wages are slower to catch up, though, hurting households. So you can see what goes on with inflation. It affects different people in different ways, different companies in different ways, and of course, different countries as well. In the Baltic region, where inflation is the bloc's quickest and has topped 25%, Estonia has seen the cost of goods and services leapfrog Italy and Spain since last year, making it the most expensive country in Central and Eastern Europe. Slovakia and Slovenia are also gaining ground and now aren't far behind. So you see what happens here, where it might have been a cheaper place to have to be living or to have assets, whatever, but suddenly things change because of inflation. And this is an impact that's going on because of many factors, whether it's because of the supply chain, whether it's because of central bank intervention, super low interest rates for so long, and then suddenly you increase them, all these things, okay? And then you have this inflation surge makes Europe's East more expensive. That's a chart there if you want to look, but there's another one down here below that I wanted to show you. Here, right here, average annual wages going all the way through. And essentially what they say is, okay, our stuff has become more expensive. That's fine if our wages were to keep up. But guess what? They're not. They're not at all. Okay? And that's the problem, because stuff goes up over time. This is the way it works, usually, because they're always creating inflation. However, you want your wages to keep up. But we know that specifically you look from the 1970s up to the present, and why is this happening? There was kind of an important event in 1971. Does anyone remember that? Ah, yes. When they unlinked gold in the US dollar, 1971, Nixon, you all know the story. That was it. If you watch so many different indicators, one of them, anecdotal evidence that I think is better than all of the other numbers, by the way, is the Campbell's Tomato Soup Index. And you can look at this, and it was like $1 in the 1970s, okay? And then it was, and then you see it $1 like all before that. It was just $1, $1, practically. And then suddenly it just goes up, but those were inflationary periods in the 70s. But what happened in the 80s? What happened in the 90s? Did the price start to fall? No, of course not. It kept going up over and over and over again. Okay? And that's what's important, because it has nothing to do with Campbell's. It has nothing to do with canned goods. It has nothing to do with tomato soup. Okay? What is important here is that you as the individual have to buy stuff. You got to buy food. You got to have shelter. You got to have heat for your home. These are important things. And if those are too expensive and your wages simply aren't keeping up, you're in trouble. And that's what we talk about here in the 2 pillars. I got it right up here. I'll teach you more about that. Let's look at this next aspect. Frankly terrifying. Energy crisis could drag 26 million Brits into fuel poverty. Now, this is out of oil price, and they get into what's happening. I've covered this 100 times before in previous videos. I just want to show you this to talk about what's happening right now is so extreme, and yet none of that is factored in, because you know what, it could be a problem this winter, but we're not in winter yet. It's still the fall, so everything's okay. That's just nonsense. You as the individual need to prepare in your own way. Do not rely on the government. Do not wait for them to say, we got a plan for you. That is never a solution. Please do what you can, whatever it is. If you've got to put some plastic on your windows in, all the doorways and things where you get a draft coming in, that's a very cheap solution. If you've got solar panels, if you've got geothermal or can get these things and it makes sense in your area to get those things, then do those. It's all dependent on your circumstances and what you're able to afford. But do it now. Don't delay. The government is not going to come in and save us, okay? We need to be aware of this. Then we have this. It's a stagflationary period that we are entering. Yes, it's inflation in a sense, but we got to understand there's slower growth. So that red line that's going down, 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 those are the projections for the growth, and that's been trending lower over the last while, yet inflation has been trending higher. It depends on where you look. It depends, so many factors, but that's important. Okay, and that just gives you a little bit of insight as to where we could be. You got to look at where you are, though. These are always going to be things that we need to talk about. Is the place where you're at the right place? This is the Global Inflation Outlook, projected annual inflation by country in 2022. So some places are completely off the charts. I mean, they're highlighting areas like Argentina, like Venezuela, and Turkey, and so on. But a lot of places are experiencing very high inflation. This chart just breaks that down. And the question is, are you in the right place? Maybe it's the city that you're in. Maybe you can move to a smaller city and live a much better life. I know it's not easy to pick up and go. That's a fact. But you got to do what's best for you and your family. And a lot of times it's hard choices, because if you don't make a choice and you simply wait it out, you could be making the wrong choice by not making a choice. If that makes any sense? If not, all right, clear as mud. Let's go. Amex, okay, American Express, shares fall as provisions for souring loans soar. And what is this telling us here? Who's the type of person that has an American Express? It's a big spender. Usually they're the person that wants those perks. They get the, all those different advantages that the card has. You're talking about a card that's like $500 a year. And, it's not even accepted in all places. But anyway, the point here is that this is usually a person with a higher net worth. And yet this company is preparing for loans to go bad, because it doesn't matter if you make $37,000 median wage in the United States. right now, 37,000, or you make 200,000, 250 I've even seen. Most people live paycheck to paycheck. So when things start to screw up for them or their environment, well, then what's going to happen? They are not going to be able to pay their bills. That's just the way it goes. Okay, and then we have this, the credibility of the Federal Reserve. Now, this was from a little while ago. This is from last month. But I'm just showing you this, that we see these articles about the Fed's credibility. What credibility do they have? Well, Northman Trader put through this thread, and I just wanted to cover the one point. It's an interesting thread, by the way. All links are in the description if you want to read them. The current Fed is incompetent, untrustworthy, ethically suspect, and unaccountable for its continued mistakes. It needs radical reform and a thorough change in leadership. There, I said it. And he basically just goes through all the evidence that there is. They didn't see the transitory thing. Was total fraud, and we knew that, and they didn't see this, and they didn't see the previous one, and all that. We know that. I've been documenting each and every step of the way here on this channel. If you haven't already, you definitely want to subscribe. But I cover everything, and one of those aspects is the credibility of the Federal Reserve, that we don't want to trust what they say. We want to basically assume that what they give us in some ways is truthful, and others is really just diverting our attention. And I'm able to break that down here on the channel. And I think it's pretty clear. I think we know what's going on in reality. And this is all part of a cycle of ups and downs. And we have to be able to not pinpoint precisely where these things are happening, but certainly we want to know somewhat of the direction that we're headed. Okay, that's the key. So let's take a moment to break this down here. The economy is reliant on debt, but the financial system would literally collapse without a continual increase in the debt. And that's just the way it works. Literally, if it doesn't continue to expand, it collapses. That's a crazy thought. It really is. Every time I think about it, no matter how many times I think about that, it's just unbelievable to me. That's the system. That's how terrible it is. QT, or quantitative tightening, is the process of shrinking the amount of assets held by the central banks, the buyers of last resort. You see, they say we're the buyers of last resort, but look at the case of the Federal Reserve holding trillions. You look at the ECB, they're holding trillions. All these other central banks are holding more than ever before. And the expectation is they're going to have to stop at some point. They're not going to get rid of that balance sheet entirely. We know that. They're going to be held with trillions and trillions still there. This normalization of the balance sheet is not even discussed anymore. That word normalization, because they know it's not normal. We're off into space right now. Okay? There is a key indicator. This is a key indicator to watch to know the direction of the markets and the economy, because the quantitative tightening matches what happens with the S&P 500, for instance. You put these two together and you can tell the difference. If you want to see a fantastic video that I did, 40 seconds the money GPS. You type that into the search engine, you're going to know exactly which direction the markets will be moving. 40 seconds the money GPS. Okay? Then we have this. Europe is positioned the absolute worst. You look at this on a global level, my opinion, Europe is positioned the worst right now globally. Be mindful of your asset exposure as well as your business. If you're reliant on Europe, you better watch out. That's all I'm saying, okay? Let's focus on what we know to be true and evident and leave speculation to others. This is the case, okay? I see so much speculation and it's just wild to see what people had come up with over the last few years. The Federal Reserve is not going to increase interest rates. They can't, they won't, they're never going to do it. And then they did it. And why these people still believe them? Why? I can't figure it out. I simply cannot figure it out. Of course they were going to increase interest rates. It's a cycle. It's all part of a cycle. I was talking about how they would, and they said, no, you don't know what you're talking about. And you know how many people unsubscribed from this channel because they didn't like what I had to say? All I'm doing is bringing you the data. And that's what you're here for. You're here for the truth. And I want to thank you for being here. Did you enjoy this video and found it informative? If you did, hit that subscribe button. I'll see you tomorrow.